Welcome back, and in our top business story, His Highness Sheikh Ahmed bin Saeed Al Maktoum, the chairman of the Dubai Supreme Fiscal Committee, president of Dubai Civil Aviation and CEO and chairman of Emirates Airline and Group, has stated that Dubai's economy could grow by 4.5% this year. The remarks came this morning at the second Dubai Economic Outlook 2012 event, hosted by the Department of Economic Development. Sheikh Ahmed stated that tourism was a main driver for the economy last year, contributing 60% of GDP. At the meeting, the Department of Economic Development's chief economist, Mr. Mohamed Lahuel, stated that private investment this year will pick up as excess capacity is reduced, and added that growth in internal exports grew 12% last year. Dubai accounts for 28% of the UAE's economy. Additionally, Dubai International has earned consumer recognition for its customer service quality by winning the coveted Airports Council International's Airport Service Quality Awards for Best Airport in the Middle East and Most Improved Airport in the Middle East. This is DXB's second consecutive win at the annual ASQ Awards in both categories. Setting a record of $60 billion in exports last year from Brazil to the UAE, business leaders met this morning to discuss how to further bilateral relations between the two countries. Under the title Brazilian Trade Mission to the Middle East, the conference facilitated a platform to introduce possible investment opportunities. Apex Brazil, a Brazilian trade and investment promotion agency, will be leading a delegation of 47 Brazilian companies at an upcoming two-day conference, with the aim of seeking attractive counterparts from the region.
Growth is important for all of the countries. Brazil, even in the middle of this crisis in Europe, Brazil has been growing at, probably this year will be growing at 4%. And I'm sure that after the crisis of 2008, Brazil has been surpassing the crisis with success. And even Dubai suffered a lot with this crisis. But it seems to me that they are, again, trying to overcome the crisis, and I see progress here in Dubai. And we would like to stress the relationship between Brazil and the countries here in the Gulf area.
This is what we are aiming. We're aiming to bring Brazilian companies into incubators, support them, subsidize all the services that to offer to them. And at the end of the day, we are anticipating that these companies will establish here and they will contribute into your economy. This is our aim by bringing them here. And I think we have done this successfully until now. And there are still lots of potential for 2012, and we're anticipating that a lot of companies in a pipeline that we are talking to establish within 2012.
4 MOUs were signed between investors and Brazilian officials, and a mutual agreement was also established. Mr. Farhad Al-Gargawi, the CEO of Dubai Foreign Direct Investment, added that a consistent trade flow between the two countries is significant, and in 2012 they aim to increase trade by 15 to 20%. While working closely with Brazil, it exposes food and beverage products, machinery, equipment, as well as the construction sectors to international business leaders and entrepreneurs who are keen on investing.
The platform is widely open to many areas, although there is a large delegation from the food sector, as we are having Gulf food coming in, but there are also other sectors. There are 6 of the largest 10 Brazilian construction companies. There are some funds, investment funds, and actually Brazilians are looking seriously to establish a strong base for their global products in Dubai.
And yet more firms are releasing their end-of-year balance sheets, as Emirates NBD reported a 2.5 billion dirham net profit for the end of the year 2011, up 6% from the previous year. Meanwhile, Abu Dhabi Surul Real Estate posted a net profit of 38.3 million for 2011, compared to 16.2 million for 2010. Revenues for 2011 stood at 3.8 billion dirhams for the company, up from 1.2 billion recorded the previous year. So with that, let's now take a look at the stock indices across the GCC. Moodys said it was worried about Europe's ability to implement the reforms needed to address the crisis. So what is the likelihood that these three top-tier AAA-rated countries will lose their top-tier ratings? And what steps will the UK, France and Austria need to take to reinforce their commitment to turning around the crisis and avoid a downgrade? Well, we earlier spoke with Philippe Dauba-Pantanacce, the senior economist at Standard Chartered Bank.
Well, I think that we need to distinguish the cases of France and Austria on one hand and the case of the UK and the other. On the other, I think that because in the case of France and Austria, they had already been downgraded by other rating agencies, the market basically had already digested this downgrade. So in this case, more than a reflection on a concern that the situation is degrading further, I think that it is more about catching up with previous assessment from Moody's competitors. I think that the piece of news really that was important came for the UK, which had escaped the previous round of downgrades. So it was basically the last big country in Europe outside Germany to be still rated AAA. I think that the shock was really more psychological, though, for the UK, because most of the market had already largely priced in the much weaker prospect for the UK economy. So all in all, I think that this announcement by Moody's won't really change the dynamic and the requested reforms from these countries.